Okay, good morning. Welcome to the March 2023 Center for Free Enterprise Program. I want to first give a brief shout out to our sponsors. Litkowski and Company is a sponsor. Dale, who's recently passed away, unfortunately, and David Litkowski. Wyndham Ratchford has been with us for many years. He's our videographer, and he's with Gold Key Media. Shout out to Wyndham. Fast Forward Business Advisors is a sponsor, as is my law firm. Our next, we weren't going to have a program in May because the Racket Club was going to be undergoing renovation on the 19th of May. But I learned this week that the renovations have been postponed, even though there's signs of some renovation in the parking lot. So our next program on May 19th, and I have a panel with 4 people on it, several women on the panel, because we're not very gender diversified at our meeting today, but we have 3 women on the panel in May. It's going to be talking about opportunities for innovation and investment in healthcare in Northeast Ohio. Today's program, which I got the idea because I had several transactions where the SBA was involved, which has not been the case over the years. I'm going to call it Everything You Wanted to Know About the SBA But Were Afraid to Ask. And our presenters are Jeff Sozio from Growth Capital. He's filling in for John, the president of Growth Capital, who was taken away, and Thomas Sangrik from the SBA. And what I wanted to do first was to allow both of our speakers to give a brief presentation about their career to date and how they got to the lofty position they now occupy. Do you want to go first, Thomas?
Yeah, so I'm from Small Business Administration, the SBA. We're in Cleveland. There's a lot of bankers here already that knows about SBA already, so, you know, we're right on Playhouse Square. SBA's been in operation since 1953. Gonna have our 70th year this year. I don't know what they're gonna do for that, but you know, we've been a steady agency all these years, and then when COVID hit, then suddenly we blew up we ended up $1.2 trillion of help, you know, not billion, trillion, you know. So we were all really busy during the COVID time, and now we're trying to get back to normal.
Okay.
Right. But like I said, I've been with SBA quite a long time there, and our district director, Gil Goldberg, who a lot of you probably know, retired. Our second guy, Jim Donato, left too, so we're leaderless in Cleveland. And hopefully they'll hire somebody else here. We got an acting out of Washington, D.C., but we're still in business. We're trying to get back to normal operations where we guarantee loans made by banks. So we do need bankers. The bankers make the loan, we guarantee it. The guarantee fees are low, $500,000 and below. There's no SBA guarantee fees. Above that, it goes up a little bit, but good time. You know, we got a lot of new bankers added on over the PPP situation, so we're just trying to continue back to the normal activities. And we do still have our SBA disaster loan, which is direct loan from SBA. During COVID, we made almost $400 billion of these direct idle loans, but we're still around even without that. If you got hurricanes, tornadoes, Ohio's flooding, we still got disaster loans direct right from the government. They're supposed to pay them back too, you know, those ones there. So.
Okay, Jeff, do you want to tell a little bit about Growth Capital and how and what you do there and how you got?
Yeah, for sure. Jeff Sozio. I started my career in 1968. No, I started in '85 in banking. Spent 32 years in your seat, National City PNC Bank, and I don't know. I get tired of certain things, and I always like credit. I always like lending money, and I was going to go to our credit group at the bank at the time, and Growth Capital and the 504 program and the CA program that we have, we'll talk about, was growing. So Kropf decides to bring in another body. I started 7 years ago with Growth Capital, and it's been great. We underwrite SBA loans, 504, we do the Community Advantage Loan Program, and it's really interesting, and I think when we have meetings like this and have a chance to remind you guys and then maybe introduce the products and loans to other folks that haven't heard about it, there's advantages to these programs. And it's pretty neat talking about it. And usually right after we have these kind of meetings, we'll see some deals and some companies that'll benefit from it. So thanks for having us out here.
Okay,
folks.
great.
Yeah, it's fun.
Let's do this first, Thomas. Tell us briefly about the PPP loans and the EIDL loans. Those are the disaster loans. And give us a general idea of how many loans were made. You just were referencing how much money was thrown out there and how that all came to be. I had clients that were doing PPP loans. Was it accountants? Was it the bankers, our friendly bankers, that were calling all their borrowers and convincing them that there's free money? How did this all work? So just, what was a PPP loan like, and how did it happen? And then, those I understand were forgiven. And then, how does that contrast with a EIDL loan?
Okay.
You want to give us a little bit of an overview? Because this is, I wanted to focus on the SBA loans today, which we'll get to that in a moment. But the SBA became very relevant when all of a sudden they had this fire hose of money in PPP and EIDL loans going at them.
Right. Well, PPP stands for Payroll Protection Plan loans. It's basically something that Congress came up with, the government, to help people over COVID that weren't working, you know. They were just, so this was in order to help pay their employees for a while, a period of time, you know. You could apply for that. Even nonprofits could apply for that, the PPP. Actually made 11.8 million of these PPP loans for almost $800 million. And basically, it was accountants that helped drive it, and the bankers, people are calling their banks to do these. I heard some bankers trying to get through on our systems there. They were working like midnight to 6 o'clock in the morning trying to get these loans done there. It was kind of like money. It was a loan, but then it was forgiven. You know, you use it for payroll for your employees or from other things, eligible things, and then it was forgiven after a while. You put in, but it was the bank driving it, and the bank had to go in and basically the bank made the money, then they asked the SBA to kind of reimburse them there. So, you know, like I said, we made, like I said, almost 800 billion of these. The program's over at 5/31/2021. So it's basically to help, you know, companies pay their employees, you know, their salary for a while to kind of get them over the top there. It was, you know, a massive program. You know, you always hear there's always going to be some fraud in there, and always going to hear, you know, the big stories about people, you know, ripping off the government. But most of the money went to the smaller companies, and most of the loans were 150,000, you know, and below. And loans could be low as like $5,000, $1,000. It's just, it depended on their tax return, the Schedule C, you know, income, you know, and it was just based over like, you know, a few months there, and you know, they could get their employees, you know, kind of paid for a while there.
What was it like at the SBA with all this new assignment of PPP loans? Was it a lot of work for the people at the
Oh, yeah, it was
SBA?
a crazy time, because a
Oh,
lot
why?
of banks had to hook up to their system, and they hadn't done SBA for a while. They had to get in their E-Tran system, so we're getting calls all
Oh,
day
some
long.
banks that really weren't dealing with the SBA had to get hooked up,
Yeah.
and then they had to put these loans through, and you're saying they were putting them through between midnight and 6 a.m.?
Yeah, I heard,
Because otherwise the system was
right, it was
was
just,
jammed.
right, it was jammed
Yeah.
up. So it's like, you know, we got a lot of new bankers all around the country come out of the woodwork, and some credit unions, and they even let organizations like PayPal do them, and, you know, Cabbage and all these non-bank type lenders did, you know, billions of dollars worth of loans. And like I said, the banks and the ones that did them actually got good fee income, you know.
And that was over a period of what, like a year or less? Was
Yeah,
all
like from
coming?
2020, like, I don't know, February 2020 to May 21, you know, over a year there.
A little more than a year,
Right.
15 months.
Right, they had
Yeah.
a first round of PPP, then they had a second round, you know.
Okay, oh, because they
Yeah.
ran out of money, or what happened?
Well, they put more money in, and
Okay.
they did a second batch, so you could actually get 2 of these forgivable loans, you know.
How about the disaster loans? What were those? Those were loans, right? Disaster
those
loans,
were
you have to
loans.
pay them back, but how many of those were there, and
Well, there
when
was
did those
like
come along?
almost 4 million of these EIDL loans, economic injury disaster loans, they could go up to $2 million. They're supposed to be paid back. The first payment is supposed to be 1 year later, then they changed it to 2 years later. The first payment became 2.5 years later, you know, that you'd make the first payments. They kept deferring it. They're 3.75% direct loans right from the government. Over 30 years, they're all like over 30 years, so people got a long time.
What, and now people are paying on those, right? The
Right,
payments are
starting to
due.
pay,
Now,
and I don't think
now
they-
John said something about how when you go to get a loan now, if you have an idle loan and you go and get a bank loan, you need to get the SBA to subordinate to the bank
Yeah,
loan.
yeah.
And is that something they're doing readily, or how
Yeah,
does?
pretty readily.
Oh, they are, okay.
See, you know, a lot of loans like 25,000 under, there's no liens, no collateral. Above that, they started taking, you know, liens on their business assets. And like I said, this is almost, you know, $378 billion of money, and a lot of it's sitting right in your banks right now, you know. That, you know, so if SBA will, you know, subordinate to that lien that SBA has there. Some people, you know, have been paying them back, you know. Everybody was kind of eligible. Nonprofits like Chamber of Commerce were eligible to get them. Just on our regular loan programs, nonprofits generally aren't eligible for our programs, but PPP and EIDL, they were. You know, you could have churches apply. You could had all these organizations getting money. So there's a lot of money put out there. And some people say that's why we have inflation. There's so much money thrown into the system there, and so. And, you know, like these EIDL loans, economic injury disaster loans, are kind of part of our regular disaster loan program, but this was a special thing for COVID. And like I said, they're supposed to pay them back, and hopefully, I don't know what percent will pay them back, hopefully most of them, but already getting complaints on the phone. I can't afford payments now, you know, that type of stuff. But that is a loan, so, but it's over 30 years. Even if you got like a $1,000 loan, they put it over 30 years, so you pay like $10 a month, you know, I've seen stuff like that, but a lot of people got you know, the average loan was $100,000 on this EIDL loan, that's the average, so.
What was the average PPP loan?
Well, that went from, I don't know, maybe around 100,000 to something like that.
Okay.
I don't know exactly.
But that had the effect of getting a lot more banks to think about the SBA.
Right.
Because of that, and then some of them now will think about the SBA and the loans. Let's go over to Joe now for a minute. And Joe, tell us about the Community Advantage loans and the 504 loans that Growth
Yeah.
Capital is involved with.
Sure.
Who qualifies? Why would anybody be interested? How many do you do? How do they come to you? This type of thing.
Yeah, sure. Just a couple comments on the PPP and EIDL. Some of you guys at banks, that's what you did for those 2 years. You made PPP loans. You learned the system. It was crazy. And then you had to ask for forgiveness on those things. I mean, that's what we did. Fortunately, our banker gave us some extra funds. We lent a lot of money out during that time. That's all we did. And it's interesting. Sometimes I'll sit back and say, you know, did we need it as an economy? Did the businesses need it? A lot of them did. There's no question about it. I mean, the PPP, it covered 2 months of payroll. And then the second PPP covered 2 months of payroll. But what I think from, I guess, an outside point of view, what the SBA did was they did it quickly. Now, they made changes along the way, and all of us had to adjust to those changes, and half the time you didn't really know how to qualify for them for it with getting, I can't remember the IRS form, the 913 or whatever the forms were, and then getting forgiveness. But I got to say, from I think our perspective doing a lot of these, they did it quickly, they got the money out, and all of us did, and I think it was beneficial, you know, definitely, no doubt about it. And Ben, no question about it. There's a lot of businesses and people out there that really don't know what the SBA does, and now they've heard about it because every company took out PPP money for their employees. So the cool thing now is we're getting a lot of inquiries because they'll Google SBA and sometimes see Growth Capital about our programs. So Growth Capital has 2 loan programs. Most of you guys know this. The main one we use is the 504. And what I like to say is just, if you're buying commercial property for your business, or your client is, you guys know, most of you know, it's a $1 million purchase. If you're gonna do it conventionally where the bank does it on their own, they put 20% down. The bank's gonna finance that loan, 80% loan, for 5 or 10 years, amortize it maybe over 20 or 25. The rate today's gotta be 7.5, 7 3/4. Well, if the bankers and their accountants, and definitely if the customer finds out about the 504 program, they're gonna say, hey, let's utilize that program. They only have to put 10% down. The bank finances 50% of the purchase on their terms. The SBA, we will underwrite. That's what we do at Growth Capital. We piggyback off the bank's analysis, financials. We submit it to the SBA for approval, 40% of the loan. 25-year fixed rate. A few years ago, that rate was 3%. We did a shitload of 504 loans then. I mean, 50 loans, I think, between, Juan and I processing these loans. Now the rate's 6.3, but it's fixed for 25 years. So it's still a pretty good rate historically. So, and then, there's a lot of qualifications. You've got to be a small business. By definition, less than $15 million in net worth. Less than $5 million in net profit, average 2 years. So there's other things like that. You got to create jobs or be in a rural area or minority, things like that. But that's our job, is to figure all that stuff out. What I tell my friends out in the banking and accounting world and all this stuff, if you have clients that are buying owner-occupied property, you got to at least give us a call and say, does this fit the program? Because I want to save my customer cash for their working capital. They don't have to use as much on the purchase. And I want to help them get a long-term, lower fixed rate.
Joe, who thinks
Jeff,
of you?
Jeff,
Is it
Jeff.
Jeff?
Yeah.
Is it the banker?
It's
who
the banker.
typically calls you? It's not the
Historically,
borrower.
it's the bankers. These type of meetings, now it's the accountants, now it's, I don't remember what some of you guys all did, but we try to get the word out. We'll have a lot of these meetings to accounting firms, things like that. We don't usually touch the customer base as much as their advisors, bankers, accountants, people like that.
Right.
But it's a great program. Sometimes it doesn't fit, many times it does. There's a lot of projects that banks don't want to do on their own. Nobody wants to finance a hotel on their own. No one's going to do that, right? So you're going to utilize the 504 program for hotels. Sometimes newer businesses. We did a country club in Sandusky. I'll tell you more about that one. No one's going to do a country club on their own. $13 million deal. No bank's going to finance that. The SBA program comes into play to help those type of projects move forward. And then the Community Advantage, some of you don't know about this. This is a cool little program. So a lot of the banks out in the world, they've got the 7A loan program, whereas they want to make a loan to a company, but there's a little shortfall. Mostly it's collateral. There's not enough collateral for the loan. Well, they'll ask the SBA to guarantee that loan on a 7A loan program. All the banks utilize the 7A. Well, CDC, Certified Development Corporations, have a little junior 7A program called Community Advantage. And this is a cool program. It's a $350,000 term loan, 10 years. It's priced at prime plus 4.5. It's a little bit up there. But we give the capital to businesses where the bank has to pass on it. And what I love to do is give examples, okay? One example, we worked with First Federal. There's I can't remember if it was this one or not, but in this case, this company, the bank that financed their real estate for some reason, wanted to cross-collateralize it with all business assets. I don't know why the bank did that. So their business assets weren't available to support their working capital line of credit. So their bank was only able to give them a small loan. Well, this company bought another business, and that part of the business was growing like crazy. Well, that banker couldn't get that increase in their line of credit approved. So instead of calling the customer and saying, hey, Joe, I can't do this for you, no banker wants to say that, they called us first and said, hey, you think your Community Advantage program could give these guys some capital they need? And absolutely, I mean, we took a third lien on ABA, so we have no collateral. SBA guarantees our loan. Company's making money, cash flow is there, okay? So we were able to give them $350,000 for working capital. And that loan won't be there more than a couple of years. The bank will probably take out the real estate loan, structure that properly, give them enough collateral to really do a working capital line. Let me give a couple if I can. So there's a wine shop in Hudson, and years ago when I was in banking, a customer of mine who frequented that wine shop asked me to meet this owner. He needed to refinance some debt and get some working capital. So I sat down with this guy, and I went through his numbers. He didn't even have a one-time cash flow. I mean, I look at him, I said, how you making your payments? I mean, am I missing something here, you know? So I showed him, what's interesting enough is everyone I've ever done that with, they say that no one's ever showed them their cash flow, you know? But I like to do that. I like the owner to know why we would say yes or something. So I showed him his less than 1 times income to debt ratio, and he understood it. A year and a half later, changed some things in his business. I sit down with him again. Now we're looking at 1.7 times. So we have cash flow, okay? But I worked for a bank back then, and banks like collateral as well. And the wine, we didn't want to take wine as collateral, you know. So I had to turn him down again. So now I'm sitting at Growth Capital, and a buddy of mine, now was his banker, sat down with him another time, wanted to lend money. This time cash flows 2 times, okay? Still no collateral. He calls me up before he says no. I said, hell yeah, we could do that deal all day long. We gave this company funds to refinance a lot of debt. We saved him $3,000 a month. We look good. The banker looks great because he didn't have to say no, and the company, you know, needed the capital. So what I like to tell my friends out in the world is if you've got smaller customers and small loans that you have to say no to, but it's cash flow, and it's not like they're losing money, you know, it's a decent deal, but you just can't get it done. Just give us a call. There's so many of these opportunities that we've been able to help a small business. And then more than not, when something changes in that business, then you take us out or you grow with that company. So that's the 2 programs that we work.
How about the country club? What's that?
Oh, yeah, that's a cool
Let's
story.
go. Let's
So
go.
these guys out in Huron, they have a gun store, and they're doing well. Couple million, $3 million a year. Well, they get this great idea to open up a country club. They travel the country. I think there's one in Phoenix, one in Atlanta. There's about 8 of these country clubs throughout the country. And they want to do this thing, right?
What's a country club?
It's a country club for guns.
Oh, okay.
It's
No golf, just guns.
Yeah, they got memberships. They are
Skeet
open to the public.
shooting.
Yes,
Target
inside
shooting,
ski
target
shooting,
shooting, yeah.
bar, restaurant, locker rooms, you know. So these guys, they think they want to open a country club in Sandusky. So of course the bank's not going to do that on their own. So who do they call? Ghostbusters. They call Growth Capital because we're the CDC. Now there's about 10 CDCs in Ohio, maybe.
Yeah.
I don't want to say we're the best, but we're the best one. I mean, I don't know if we're the biggest, but we really work a deal. We really, seriously, we work hard. Anyways, this is a long story. So these guys put together a business plan, projections, based off of what they were doing before and what they're going to do with the country club. We're working with their bank. It's a $13 million project. The max we can do is $5 million from the SBA. We put it together before COVID. The company, it wasn't a great package, but we felt pressure. We submitted it, we got a decline. SBA wants every owner that has 20% or more to guarantee the loan. Well, these guys had a lot of minority owners, but all the money they were putting down was coming from the minority owners. SBA says, we want every minority owner to guarantee. So they gave us a structure. What's cool about it, SBA gave us a structure that they would accept. Well, then COVID hit, nothing happened for a while. After COVID, they rejuvenated this business plan. They listened to us. We got a third-party feasibility study. All the owners were guaranteeing it. We got an approval. They're building, I don't know how many you guys shoot, they're building this country club on Route 250 near Kalahari. And it's going to be open sometime, I think, in July or August. So we'll have to try that and all go out there. Maybe we'll have a growth capital meeting out there with all you guys. Yeah. But again, no bank's going to do that.
Right.
So the 504 program, you know, it comes into play to help the owners put less money down, but it also helps the banks because the banks are in first position on a much smaller loan. So
Right.
we'll take a second position. So they love that. So it works out
Okay,
pretty well.
that's great. Now, what I
Yeah.
want to do now, I want you guys all to, in the audience, to come with your questions now. You can even tell a little war story if you want. But I want to talk next about what got me thinking about this program in the first place, and that is, you know, SBA guaranteed loans. And I don't know, maybe, Thomas, you both will be familiar, but talk about what's required to get one and then why people get them. So what borrowers, you know, need to go SBA, I guess is the way I would put it. What borrowers need to go SBA to get their deal done? And then what does the SBA require in order to, you know, to guarantee a loan?
Well, when the SBA guarantees a loan on the bank's 7A loan program or the CDC's Community Advantage Loan Program, the SBA, especially if we have a preferred lender status, never sees the deal, never underwrites it, doesn't look at the financials. It's the SBA specialists in the bank, Dale over there, First Federal, and I don't know if you guys have a SBA specialist here or not. Okay, and you guys know this. So we put the deals together, 7A or CA, and we, through the E-Trans system of the SBA, fill in and we click it and we get an authorization number without the SBA seeing it.
Okay.
So it's on us to make sure that it qualifies, that make sure it has everything, because if that loan goes bad and we ask the SBA to guarantee, you know, give us that guarantee, pay that percentage, 85%, 75%. If we did something wrong, they will not honor that guarantee.
Oh,
So it's a great program, but it's the SBA specialists out in the world and us on the CA program to really understand the qualifications, what's needed, and what we need if we ever need to ask for that guarantee to be paid.
Okay, and then you don't really have to deal with anybody at the SBA because you just put it in the system.
That's
Right.
the banks that have a preferred lender status.
Okay.
Some banks don't, and they will submit a deal to underwriting. SBA will underwrite it and approve that loan. But
What?
most of them have,
Would you say the big generators of banks they do have the preferred
yeah,
status?
no question about it. Yeah,
Right.
yeah. But, and Dale could talk more about this. On the 7A side, from my understanding, why would a bank want the SBA to guarantee that loan? A lot of times it's lack of collateral, okay? A lot of times it's on a business acquisition, not real estate, but the business. So if I'm gonna buy your law firm,
Right.
right?
I got no assets.
You got no assets, right? But you want $3 million for your law firm, and I want to buy it because it generates enough revenue. I could pay that back in 5 years or what have you. Okay. Well, the bank's not going to lend me $3 million to buy your business unless the SBA will guarantee that loan.
Okay.
Because we don't have collateral, that's where that 7A loan is mostly utilized And it's needed. It's needed to guarantee those type of
I saw it recently
acquisitions
with
and
an
such, yeah.
architectural firm.
Yeah,
The number 2 man at the architectural firm was gonna buy out the number 1 man. And the architectural firm was making money. And it had a lot of people working there, but there was nothing. What would there be at an, I don't
Right.
know that much about it, but there'd be a bunch of desks, I suppose, people coming in and out every day. Might be some receivables, might
Right,
not be.
right.
That's all there would be. So there was an SBA. Now I'm handling a marketing business. It's the same idea. The business is worth money. Business is throwing off money. But what does the business own other than maybe some computers or video cameras?
Well, you know,
So-
Ben, again, people like you and maybe some other guys in the room, they're involved with business owners that are selling and things like that. And, you know, a lot of times, if you can't get conventional bank financing for that because of lack of assets, and you don't know about the 7A loan program, the seller is usually going to have to take a note back.
Right.
And sometimes they want to for tax reasons and others. But again, I think the PPP, like you said, and EIDL open up what SBA does to a lot of people out in the world. And hopefully these programs will be utilized more, yeah.
Yeah, now, do you know, Thomas, do you know how many SBA, I haven't gone over this with him yet, so it's a trick question.
Uh-oh.
I tell him I'm not Ted Koppel or Dan Rather or anything, but here I'm gonna be. Do you have any idea how many SBA guaranteed loans there are in a year? Or?
Yeah, well, in our office, there was like 1,900 last fiscal year. Generally, in our office, maybe 17, 18, 2,000 regular SBA deals. These are ones we need, lenders to do. Some banks, we need our banking partners to do them. Some banks do a lot more than other banks. I know Premier's a very active lender, Huntington, we got First Federal. So we need our banking partners to do them. But the one thing about SBA is we do honor our guarantee. I know Jeff says if he does something wrong, we don't. I did purchases for years. I never denied a purchase. A rare case is maybe the bank didn't get the mortgage, didn't get the lien, then we have to repair the guarantee, but we try never to deny it. It has to be something pretty bad, pretty fraud. So just about every time, it's got to be pretty rare, and we kind of look at harm, or does this be harmed by something that happened? But it has to be bad. Like I forgot to get the mortgage, I forgot to get the lien, I didn't get the guarantor, so we might have to repair, or occasion, very rarely ever deny one. But like I said, I did purchase for 10 years, never denied any of them. So it's very important because you deny a purchase to a bank, then they don't want to do SBA loans anymore. That's happened. So we always try to honor a guarantee. The thing about SBA, if let's say we also can do startup ones too. A lot of times bankers won't do a startup loan on their own, but with SBA they will, and we give help. We have these small business development centers and SCORE, Service Corps Retired Executives, that provide free business counseling to borrowers, potential applicants, and that's where in the banker. Let's say you run into somebody that that's not ready, they don't have a business plan, they're just not ready to go. You can send them to this small business development center or SCORE, and they can help them with their business plan and get it ready, and maybe they come back to you ready to go. So.
Now, what are the requirements for any SBA guaranteed loan? Like, what are the rules? People have to put a mortgage on their house, would seem like. Right?
Not
What are the
always,
terms of it? Not always?
Yeah. They try to take all available collateral, they try to take that. But here's the thing, you take all available collateral, if it's still short, you can still go ahead and do the deal under SBA because you're taking what's available and it's cash flow. SBA is more of a cash flow lender than they are collateral. Cash flow is like the number one thing. That's why we can do deals that collateral is considered short. So the bank asks for an SBA guarantee, and that's kind of like their collateral. They got the guarantee 75-80% that things don't work out, default, they can get that guaranteed money back there. But generally, it's kind of up to the bank. Generally, you need a business plan. You got your financials. The startup, you need projections. But I've heard like some bankers won't do a startup, but if with an SBA loan, they'll consider it. So Then we got big banks, we got small community banks, doing SBA deals. Thing about during PPP times, sometimes, maybe, a customer went to a big bank and they had like, 20,000 PPP loans they had to do, and they couldn't get to it. So then a lot of them went to these smaller banks. So a lot of these smaller banks gained customers over the PPP times because their big banks couldn't serve them because their backlog was so big. So we had all these little banks gain new customers, because of the PPP, because they thought, well, my big bank's not helping me, but this community bank will help me. So it was a kind of a boon for community banks too, the PPP times.
Now, you said you do almost 2,000 guaranteed loans in a year. How big of a region is the SBA region that you're
See,
in?
the thing is, SBA's in every state. Ohio has 2 district offices, so we cover kind
Okay,
of top part of the state, 28 counties from like Indiana to Pennsylvania down to Steubenville, Akron, Canton. Then we have our Columbus district office.
okay.
Well,
All right,
we're
and
in
that's
every
in your
state.
division, is you do maybe 1,500 to 2,000
Right,
in a
right.
year.
But, nationwide, they're doing them everywhere.
I had no idea the SBA would do a loan to a startup. I thought that was like credit cards and family and friends. But what's a startup loan usually going to be? Just a small $100,000
Oh,
or
no,
something?
it's whatever. If they have the business plan, they got, let's say, money to put in there, and maybe they have experience. We rely on the bankers to kind of determine that. But,
Okay.
like I said, SBA helps because startups, that help fuel the economy there. So SBA is
Right.
willing to take the risk in order to start up a business or maybe do a business that you wouldn't normally like to do. Like you said, hotels, nobody wants to touch those. I know, with breweries.
What, breweries?
We do a lot
Yeah.
of breweries,
I know you do.
Is that right? A lot of breweries, okay.
But during, like, when we had the Great Recession in 2008, nobody was doing anything with cars, no car park people, no dealers. These dealers were calling us, can't get financing, banks are throwing them out. So we help during good and bad times, and especially the bad times. We're always going to give the lending authority, no matter what's going on, especially bad times, we're going to step up to the plate. And so,
We may be in an uncertain time now in the banking, right? We may be heading into an uncertain time right now.
could be, hopefully
Yeah,
not,
hopefully not.
But a good time for SBA guarantees to
Yeah.
protect the bank,
Yeah, do we have any questions from the audience? Jeff?
In that discussion about banking right now, I see Jeff shaking his head. So Jeff, based on what we've watched here in the last week, your view?
I don't know. I mean, what do you guys think? I think it's the type of banks that were in, I can't remember, like Silicon Valley, right? And the other one was more in the,
Crypto?
yeah, crypto, right? And then what's the other one?
The
Republic?
other one's out in California too,
Republic, right?
Bank.
First Republic. And then I read, you guys all step up and lend them or give them $30 billion to keep them steady, huh? That's cool. I mean, yeah, I personally don't think there's a banking crisis whatsoever.
Well, they said the Fed put like over 200 billion out to different banks in the last week.
The FDIC
FDIC maybe.
allows
Okay.
the banks to post their treasuries
Oh, all
at
right.
face value.
Okay.
It's fine.
Well, the funny thing about this psychology is when you hear this on the news, you can be worried. You don't have to understand it to be worried. You can just hear it's the second biggest bank failure, right after Washington Mutual. And if you're going to be worried, then you're going to be worried.
Depends
And
on
then
what channel you watch, I
You
think.
might not go to lunch today, or you might not,
Right?
book a trip, or whatever the case may be, and then it can be a vicious cycle, right? But the SBA will always be there. The beat will go on.
You know,
We got more
yeah,
questions.
yeah.
Sean?
So, apologies if you touched on this earlier, I didn't hear it. Can you speak to size limitations in both in the loan size and company size and
Yeah.
other gradations there?
Yeah, by definition, small business is a company that has a net worth of less than $15 million. So most of them, is less than 15, or annual net profit of less than 5.
On average.
Average 2 years, yeah.
And the revenue caps by industry?
You know, there's two sets of size standards, alternative and I can't remember the other. Yeah, but if it doesn't work with the 15 and 5, then depending on the Naxos code, it might qualify depending on how many employees you have or sale size. Yeah. And usually, most of the deals that we talk to work. And then as far as the total amount that we can lend, on the CA loan program, it's only $350, okay? But on the 504, which includes all their debt. So if they have a 7A loan out there for $2 million, we're limited on $3 million on the 504, $5 million, which is, you know, again, a lot of money for a small business.
Okay.
Yeah, I was just, it piqued my interest with the startup loan. I'm just curious, what are the terms of those type of loans?
Well, and maybe the bankers can jump in too if they've ever done one of these startup loans with a SBA guarantee.
Yeah, the terms are negotiated by the bank and the structure and everything else, so it really depends on how much money you're putting in, what your collateral, what your business plan is, and so on.
Is it set typically like a 10-year amort, or
I'm sorry.
are there typically like a 10-year amortization?
Probably. If there's real estate, it can be longer than that. Yeah. And if it's a mix of real estate and assets, then it's a weighted average of 25 years for real estate, 10 years for fixed assets, and maybe it's a 13-year amortization.
Are there delayed initial payments?
It can be, if you're doing renovations or something, it
Okay.
may be an interest-only period,
Got it.
up to a year.
And you can stagger them, so you can start off on a 10-year AM the first year and then go to 8, 6, you know, you can match the cash
Cash flow,
flow.
right.
Yeah.
Yeah, there's not a prepayment penalty unless it's a 15-year or longer term, so take the longer term, if you can pay it ahead faster, that's fine. But if not, then if you have a longer amortization, you can get another good thing.
On a deal that you're gonna touch, you know, an M&A deal, there's usually a material weakness of some type that is why you're bringing in the SBA. So that could be management maybe doesn't have proven expertise, limited resources coming into the transaction, lack of collateral, single purpose, client concentration, those be typical.
Those are going to be the situations where you bring in the SBA.
Yeah.
Okay, do we have other questions?
I just have one for Tom. With LIBOR going away, is there any talk about being able to price on SOFR at the SBA? anytime soon?
I think there is, I mean, it's based on, you know, prime now, but they're,
Yeah.
I haven't heard that, just right now it's based on the prime rate
Just
there.
curious.
But, you know, things can change, I mean, they can change, but that's, right now it's the prime based on that, you know.
Do you guys have any additional thoughts to share?
No, I think this is good because, like you say, a lot of folks didn't know about it. We're getting a lot of calls. Some of the stuff, you know, we can't do, and we'll tell them why. But some of the stuff we can do, and it's people and customers that we never would have touched without the PPP program and EIDL. And I think the general public, especially business owners, are learning about SBA, so it's pretty good, yeah.
Yeah,
Yeah.
SBA's not what it used to be. You know, there used to be a lot of fear around SBA.
Yeah.
A lot of what?
Fear.
Fear.
You know, 15 years ago, oh my gosh, it's a bureaucratic situation. I'm never gonna get my deal done. It takes 8 months to get an SBA deal done. That's not true.
Yeah, 30 years ago, one of my first clients, when he bought many businesses, but when he was buying his first one, he got approved for an SBA loan, which was helpful to him, but he didn't do it because, like you're saying, it just sounded like it was one hell of a process, a gauntlet. And so it was like this. He bought the business, he went on to buy many more, but we never did an SBA loan. And then I would say for 20 years, I didn't see any SBA loans, maybe 30. And now they're coming in one after the other, like super tankers lining up at the harbor. And it's not too bad. There's requirements, and there's a bulk of paper, and it's not heavily negotiated, it just sort of comes forth and it is what it is. But I would say I've seen 5 deals with SBA, including the one we were doing last Friday at the winery with SBA all over it. So it's, maybe that's it. Maybe it's a perception thing. And maybe there are a lot of bankers who realize they can do a lot of loans with support from the SBA that they aren't going to do otherwise.
Well, plus a lot of banks have SBA specialists, and that helps tremendously.
What's the specialist
That's-
role? What does that person do? Are they know the requirements and they input it
Yeah.
all into the system and
Yeah.
that's their thing?
Yeah.
Okay.
So, and if you're preferred lender, like Jeff said, that never goes to the SBA. So that's-
Oh, you're a preferred lender, so your
Correct.
specialist
that
just puts it in.
specialist will
Yeah.
Make
Yeah.
sure that it's decking, that the deal is decking against the SOP and they're not running afoul of any, you know, eligibility requirements before it's entered.
So for
Okay.
those reasons, it's made it easier, less complicated to the borrower to utilize that program.
All right, particularly with the banks, and I guess there's more of them that have a SBA specialist.
Yeah, we
And
give
then
the- we
somebody
give-
like a Huntington, of course, they would have one, right, because they're big in SBA.
Since they're not in the room, we don't think they.
We don't think they're a big deal, no, here we don't.
Yeah, yeah.
Yeah, SBA gives the banks delegated authority, which means you can go ahead and do the loan on, on behalf of SBA, we trust you. So that's what cuts a lot of paperwork. We have SBA Express program, which is for 5 loans, where banks can use their own loan forms and procedures and get a guarantee. So less of a guarantee, like 50%, but that streamlines the process. So as they say, we're not your grandfather's SBA anymore. It's more streamlined and more faster. We rely on the banks to do it, basically. Because, the SBA staff's not huge compared to a lot of agencies, and so we need our friendly bankers to do this.
Be
do
your
the-
partners.
Do the people doing
Yeah.
it.
All right, great. Okay, any other questions? Yep.
Ben,
John?
first of all, I just want to say thank you once
Yeah.
again. It's terrific. For Tom, with that average, what's the timeframe of the typical loans you're talking about, the most common loans? What is the turnaround time?
Okay, for SBA, a lot of times it depends on the bank. I mean, a bank can, how fast they can do it. Dell, what would you say the average time?
You know, what I tell borrowers is the clock starts as soon as you give me all the financial information I need. And, depending on the size of the loan and complexity, I mean, it can be a matter of a week or maybe 2 weeks to get through underwriting and make sure the structure's there. To say, part of the role of the specialist, as you're saying, the SOP is 590 pages, and there's also references to CFR amendments, so there's a lot to go through. And I think sometimes the SBA gets a bad rap because the lender is not maybe using a specialist or doing it in the most efficient way. And we're internally, we're looking how we can streamline that as well, so that a commercial lender maybe doesn't go off on a tangent that's not going to be eligible. So it's I would say only slightly longer than it would be for a conventional loan. It's going to go through the same underwriting.
Thank you.
Okay.
Tom, can you address appraisal requirements when borrowers buy into business?
Well, yeah, well, Jeff may know more about that. They change it, but with over 250,000, you need appraisal, or is it?
No, you're talking about a business, not real estate.
Business.
Yeah. When we do a business act under the CA program, only up to 350, we'll use a handful of things online for business analysis. We just throw the financials in and get a valuation in our world. I don't know, in the 7A world, if you're doing a $2 million acquisition, do you need a third party?
Yeah, if the
Evaluation?
the airball is 250,000 or more, you need an outside business valuation. Those can be expensive, but
Yeah.
it's a way to get a deal done.
That's like, if we're doing, like for our country club, okay? The SBA requires a third-party feasibility study in that case, not just their projections, but a third party. Yeah.
Okay. Jeff, Tom, thanks very much for coming. Let's give them a round of applause. if you could.